Today, Bitcoin falls to $62,000. FTX says that almost all customers of the bankrupt crypto exchange will get all their money back. And Alma Angadi, who worked for the SEC for about a dozen years, weighs in on the agency's recent actions against crypto firms. I'm Mackenzie Sigalos. Crypto prices are back in the red this morning, with Bitcoin dropping more than 2%. By noon Eastern, that cryptocurrency traded at around $62,000. Meanwhile, Ether also down more than 2%, trading just above $3,000. And Solana down 5.7% to $145. Okay, let's talk about the top stories. FTX says that most of its customers will get all their money back and then some. In a reorganization plan published late yesterday, FTX estimates that it owes creditors more than $11 billion, and the company says that it has between $14.5 billion and $16.3 billion to distribute to creditors. Now, the plan says that customers whose claims amount to $50,000 or less will get about 118% of the amount of their allowed claim. Around 98% of creditors will receive that compensation. Now, importantly, this is based on the value of those assets in US dollars as of November 2022. And back then, Bitcoin was trading at around $16,000. The reorganization plan still needs to be approved by the bankruptcy court. FTX customer money has been locked up with the exchange since it filed for bankruptcy protection back in November 2022. Next, major financial institutions are teaming up to test a shared distributed ledger. Nearly a dozen firms, including JP Morgan, Citi, MasterCard, and Swift, will test a regulated settlement network to tokenize commercial bank money, central bank money, U.S. treasuries, and more. Now, this project is led by the Securities Industry and Financial Markets Association, and right now it's just a test. The transactions are just simulations, but the goal of the network is to allow 24/7 settlement of multiple assets, something that Wall Street has seen as a major promise of blockchain technology. Raj Damodaran, Executive Vice President of Blockchain and Digital Assets at MasterCard, said in the press release that a shared ledger could unlock the next generation of market infrastructures. All right, for our main story, Crypto World's Talia Kaplan spoke with Alma Angadi, partner and global legislative and regulatory risk leader at the consulting firm Guidehouse, about recent actions that the SEC has taken against crypto companies, including the Wells notice sent to Robinhood earlier this week.
You have a law background.
I do.
And you worked with the SEC for about 12 years. And so I want to start off by asking you about the most recent developments as it pertains to potential enforcement action tied to the SEC. We learned this week that Robinhood received a Wells notice from the agency tied to its crypto operation. So what do you make of that development, and how do you think that will end up?
This is just one more case in the progression that the SEC's been focusing on in their crypto enforcement, right? And so it's just like a lot of the other exchange cases. And if the SEC is correct, and some or all of these crypto assets are securities, then as a practical matter, all of these exchanges should be registered as broker-dealers. That's how the law works. Now, Robinhood has a registered broker-dealer entity. They sell securities, as everyone knows. And so they may have a leg up because they have that regulated infrastructure that may or may not be in place in their crypto asset part, right? They have that governance and framework and infrastructure. So if, again, all of this comes down to the SEC saying, many of the products that you are selling are securities. And if they are, then they all have to be registered. And that's what these cases involve, is the failure to register as a broker-dealer. Now, the SEC's lost a couple of these cases.
And expanding on that, SEC Chair Gary Gensler was actually on CNBC this week, and he was asked about the Wells notice to Robinhood from the agency. And he didn't answer the question directly. He said he can't comment on specific cases, but he did say that unlike traditional assets, crypto assets don't offer the same protections and investors don't get the same disclosures as traditional assets. And he did say that many of them are deemed securities. So what is your reaction to that argument?
Well, I mean, he's right. crypto assets, whether they're securities or not, if they're not being sold through a regulated entity like a broker dealer, even though they're regulated in other ways. These exchanges are regulated as money transmitters. They don't have the consumer protection requirements. They don't have the market safety and market integrity requirements. And a lot of folks are investing in these products. That's what they're using them for. Now, the other side of the argument is people invest in a lot of things that aren't securities. Gold bars, old comic books, all sorts of things, art, antique cars, and they buy them hoping that they'll go up in value. The only question is not whether people are investing in them. The question is whether they're investing in them expecting that the activity of others will increase the value. And that's really the question. And I think in the absence of clear legal guidelines, the SEC sees a vacuum of authority and they're stepping in before something bad happens. Like that's the view kindest to them.
Overall, what is your take on the SEC's approach of regulation by enforcement? We have seen a lot of enforcement actions against several crypto firms, including Coinbase. In March, the SEC scored a major win in its lawsuit against the crypto exchange when a judge ruled that the agency's claim that Coinbase engaged in unregistered sales of securities could be heard by a jury at trial. So do you think that this is an effective approach, or do you think there's a better way?
So if I were king of the world or queen of the world, I probably, and in the absence of legislation defining these things, probably would have tried to give more guidance or warnings. Now, they might say they had been giving warnings, saying these are securities, bringing the cases against in the ICOs, but many of those involved fraud, which is different. And there's a lot of criticism coming from the industry that they try to work with the commission, that they try to get guidance from them, even on a one-on-one level through their Office of Innovation and things, and they're not getting the feedback that they need. So I think a little bit more cooperation with the industry while still moving forward to protect people that are investing in these assets is probably more productive overall. Now, but philosophically, you always have to regulate by enforcement a little bit, right? Because you cannot have regulations that outline every single possible thing that can happen.
Now, you also have experience with anti-money laundering cases.
I do, yeah.
And recently, just last week, former Binance CEO Changpeng Zhao was sentenced to 4 months in prison after pleading guilty to money laundering violations. Back in November, he was ordered to pay a $50 million fine. And so I'm wondering, given you advise and you consult government agencies, regulators, and the financial services industry around the world on money laundering and how to combat terrorism, what is the answer there? How can you combat money laundering in the crypto space?
So it's interesting because the money laundering rules in crypto are the most buttoned up, because in 2018 or 19, the Office of the Treasury Department, where I started the enforcement program, Financial Crimes Enforcement Network, said, we're just going to say if you're doing business in crypto, you're a money transmitter. And so the AML laws have applied for a very long time. And so they're not in bad shape. Like the US Binance, their issue is the SEC's unregistered broker-dealer. They haven't been charged with not having a good anti-money laundering program, right? And then talking about the special mitigants of blockchain, it's traceable. So you can actually identify the risk of transactions on the blockchain sometimes more easily than cash transactions.
Now, Ann Gotti also discussed regulatory developments in crypto.